Moving on from that to a company that's had a stellar performance is JK Paper. In fact, their earnings have more or less doubled in the quarter. Profits are up 57% at 56 crores. We've got the management joining us on the show. In fact, the CFO of JK Paper, V. Kumaraswamy, joins in. Morning, Mrs. Kumaraswamy. Thanks for joining in. Firstly, congratulations. It's been a really good quarter for JK Paper. Your earnings have more or less doubled in this quarter. What's led to such a spectacular earnings?
Yeah. Well, the markets have been good, and so long, I mean, we also have done quite considerable work in terms of usage efficiencies within the factory, as well as we have been continuously tweaking the, product mix so that, the contribution per hour in the factories keep on improving. And there have been several other interesting things like interest rate reduction, debt reduction overall because of the cash being used for debt reduction. And the scale economies also have started kicking in after the new plant went on stream in 13. Slowly the scale economies are beginning to kick in. So all these have contributed to a continuous improvement over the last 4 to 6 quarters. It is slowly reflecting in our results.
What about input cost, Mr. Kumaraswamy? How is that trend looking like?
Hello?
So, Mr. Kumaraswamy, what about input cost? Give me a sense of what that played out like in the quarter.
Basic input were two important input costs. Interest cost or input costs?
Input cost.
I'll comment on both. Interest costs have been more or less stable, slight reduction over the corresponding quarter as well as the preceding quarter because of debt reduction. Talking of input costs, the basic two inputs are the wood as well as the coal. Coal has inched up, as you know, in line with the markets as well as Coal India prices. But due to reduction of distances in procurement of raw material, main raw material being wood, we have been able to effect some economies there, and that has been continuously coming down over the last, let's say, from October-December quarter of 2015. It has been continuously coming down, and over the last year also we've gained about 4 to 5% in that input cost. So that is an additional factor which has contributed to our internal efficiencies.
Mr. Kumaraswamy, margins have also gotten better. Operational efficiency has improved. Other income has also inched up slightly. Give me a sense of what has led to this operational efficiency. I mean, what are you doing that's actually working for the company right now?
I'm sorry, I lost you in between. Can you repeat the question quickly?
I said, give me a sense of how you've managed to improve your operational efficiency.
Oh yeah, for the new machines, especially the pulp mill has become energy surplus in the sense that it is, besides producing pulp itself, it is also throwing energies. The operations of the paper mill also is consuming less and less energy, and we are way short of even the parameters guaranteed by the manufacturers. For example, we are consuming about 1100 kWh per ton as against a guaranteed 1200 kWh. If you look at the coal efficiencies, we used to consume something like 1.6 tons of coal per ton of paper, which is down to about 1 on a company level, and the new machine is down to about 0.59, which is a significant reduction, almost about 7 to 8% reduction, or rather improvement in EBITDA costs on power and fuel alone. As well as we have been continuously looking for substitution of chemicals that go into that, and the in-situ manufacture of chemicals also we have been continuously looking at opportunities to optimize costs. For example, we have used pet coke instead of furnace oil, which has given significant reductions in the production of lime, which is in situ. So these kinds of efficiencies keep on improving, and there is further scope for improving the speed of the machine as well as the utilization of the machine. Plus some of we are also trying to substitute some chemical. These are all ongoing exercises. and they have started slowly reflecting on our results. Going forward also they will have some continuous improvement in the results. And Orissa is a little ahead, so we are also learning lessons from that unit for the other unit which is in Surat, and that is also continuously improving in its margins.
So Kumaraswamy, going ahead, what is the sort of internal targets you've set for yourself in terms of top line and of course profitability as well? So what's the kind of growth outlook that you have?
Well, we don't put out any forward-looking numbers, but to give you a sense, the industry is growing at around 7 to 8%, and we hope to be in a position to grow in line with that, although we are already pushing 103% capacity utilization as of date. But there are always pockets which are not still operating at 100%. We will try to get them to 100% or even push beyond. Beyond that also there is always a scope for improvement by 1-2% every year in the capacity utilization as well as the output that you squeeze. And we will also look at usage optimizations and product mix optimization continuously. And the markets are also good now. The prices in coated and uncoated segments have been charitable, I would say, not too very buoyant or something, because imports take place very heavily in coated and to a lesser extent in coated, uncoated. So they will put a kind of a price cap on it. And we saw quite a few capacity additions in the boat segment. TNPL came, Imami came. So they're all getting slowly absorbed in the market. Once it is absorbed, going forward in the next, let's say, 12 to 15 months, there will be a gradual uptick in prices, because they did fall in the last about 12 months, and it should catch up and it should improve further as we go along. So these are the various things that we are attempting inside to push our results even up, but we don't put out any forward-looking numbers.
Kumaraswamy, good luck with business going ahead. It's been a good quarter, and of course congratulations once again. The stock is up about 1%, but let's not forget some of these paper names have been roaring in trade in the last couple of months. Well, another company that posted earnings that were below what the street was expecting on back of higher